Hi there, I'm Ben Jones. Welcome back to Dukascopy TV. Here in the Geneva studio alongside me is Cheryl Hicks to discuss the evolution of impact investment. Cheryl, thank you very much for joining us again.
Thank you.
Now, if we can begin by going straight in and discussing the changing face of impact investment. How's it evolved from when it was in its infancy?
Sure, thank you. I think there's been a lot of evolution in fact, which is very positive. Both evolution in terms of the types of investments in impact, the size of the investment, the ticket sizes, which tended to be less than $1 million being put into companies with social and environmental added value. And now we're seeing those ticket sizes move up into the 1 to 10 million range. When the investments are larger, we can also have larger impacts. So this is really positive. Another evolution is the banks. So it tended to be bespoke impact investment firms that were placing impact investments mostly for private investors and some institutions. And now that the major banks are getting interested in impact investing, we see a large opportunity to scale. And the third area is networks. A lot of investors are being brought to the table through networks like the Global Impact Investment Network, which is a global network focused on impact investing to help educate investors on the added value of impact investing in companies that have social and environmental added value, as well as financial return. And here in Switzerland, I know Quadia founders are also, and myself are co-founders of an organization called Sustainable Finance Geneva, whose mission is also to educate investors on the added value of sustainable investing, including impact. So these are really positive evolutions, I think, that are growing the industry and showing its significance and differentiation in the market.
Can you also elaborate a bit on impact measurement?
Sure. Impact measurement at Quadia is something that we hold very strongly and something that we feel still needs to evolve a lot in the industry. If we're truly going to differentiate impact from mainstream investing, we need to be able to show the impact that we're having on social and environmental factors. So at Quadia, we invest in companies and funds that have unique social and environmental added value, and our bespoke impact measurement approach takes a sustainability issue, whether it's environment, social issues, poverty alleviation, and we set specific benchmarks with the companies. How is their business model addressing those issues? How are we measuring that? As their business grows, how can we measure that impact is growing as well? And that's how we approach impact measurement at Quadia.
Okay, how do you see impact investment changing over the rest of this year and the next year as well?
Mm-hmm. So again, as I said in the intro, we've been really encouraged by the banks. So the banks are starting to look at impact investing. A new trend is funds of funds. So that's how they're getting into impact investing. We've also seen the importance of the banks that we've seen in impact investing is that microfinance and clean tech, which are the two impact investment themes that have gotten to scale. A catalyst for them getting to scale is having them distributed on major banks' platforms. So this is the importance of the bank really for reach to bring in new investors and a broader base of investors. And so we see this growing in the next phase. Quadia has a new fund that we're launching, an Africa Health Fund, which we call Economic Development for Health Fund. And part of the strategy of this fund is to have it distributed on a major bank's platform in order to get to that scale. Not only scale for our investors in terms of returns, but also scale in terms of impact.
Okay, now can you discuss some of the current problems that are facing impact investment and some speed bumps in the future that you expect will affect you?
Sure. As impact investing is still quite young, some of the first investments being made around impact or called impact investments were about 2007, 2008. So we still haven't seen a lot of exits. And so in impact investing, again, we're talking mostly private equity, both equity and debt. So we've seen some repayments of loans in terms of debt, of course, but in equity we haven't seen the big wins. And as soon as there are some big big wins, and we expect that to come very shortly because there's usually a 7 to 10 year life of those investments. And so once we start to see some big exits where investors are seeing market returns as well as impact, we think that there will be a lot more attention on impact investing.
Fantastic. Cheryl, once again, thank you very much for joining us.
Thank you. And
thank you for watching. Do make sure you keep clicking back to Dukascopy TV for plenty more updates and exclusive interviews. Bye for now.